Our clients are constantly asking us, how do I cope with all of this carbon reporting? There's so many acronyms: CBAM, PPN 0621, PPN 006, PCF reporting, embodied carbon, SBTi. We know it's confusing, and our job, everything we do, is about trying to simplify all of this for our clients to save you time and save you money. It does not have to be a cumbersome, expensive, drawn-out process, but everything does need to be done correctly. Natasha, you and I were talking about a client, that financial services client who had their carbon reporting done by their accountants. Would you like to elaborate?
Yeah, absolutely. One of the challenges with carbon reporting, and certainly SECR reporting, is what has to be included. Which categories of Scope 3 do you need to report against? With SECR, Scope 1 and 2, mandatory. Scope 3, we often see business travel included. But the challenge with carbon is it's always about what is relevant to the business. And if it is reasonable for you to include a certain category, then you should be including it. So for this particular company, what had happened was for many years now, since the pandemic, they had switched to hybrid working. So within their SECR report, they had been reporting against business travel. But when they switched to hybrid, those emissions vanished. They started to report a 60% reduction in their emissions. But that's not true. Those emissions just shifted categories for commuting and teleworking. So for lots of businesses, especially with the hybrid model, it is important to be recognizing that your report might not be sufficient at just the business travel category. You should be considering your employee commuting. You should also be considering your supply chain, purchase goods and services, where 80% of your organization's emissions sit. Certainly companies looking at going towards carbon neutrality, it's perfectly valid to say you're carbon neutral on what you have reported on. But there is a grey area in starting to recognize that you need to be beginning a deeper dive into where you're going to be most heavy in your emissions. And that would be in those slightly more complicated areas of Scope 3.
Okay, so when looking at this PPN standard, which is operated by the Cabinet Office, actually, the criteria are much stricter than the
Yes.
carbon reporting criteria imposed on large businesses. Because the PPN 006, which is a public procurement note, it's the mandatory standard for being a provider, a supplier to any government contract. This demands Scope 1, Scope 2, and a minimum of 5 categories of Scope 3 reporting. And our caveat to everybody is the Cabinet Office is routinely rejecting inadequate carbon reduction plans, PPN 0621, PPN 006 reports. They're
It has
being
changed.
rejected because they're not on a standalone web page, they've not been signed, or the carbon reporting data across the 5 Scope 3 categories has not been adequately explained as to why it is or has not been included. On the other hand, corporate or SECR reports, which apply to businesses of, broadly speaking, over 250 people, £18 million on the balance sheet, or £36 million turnover, any two of those categories, they're being rejected by company auditors, not by the Department of Energy or the Environment, but by your auditors. Don't take the chance. Do it right first time, because frankly, the additional cost of doing it right versus ticking the box and submitting some report produced by your energy provider is virtually zero. Do it right. And the advantage of all of this is that your own marketing department, your own corporate, your own business brand, whether you're a micro SME or a large corporation, you can then talk to your customers about your sustainability efforts and how you're reducing your carbon, how you are reducing your carbon footprint. What do you think, Tash?
Well, and this is actually the key. Your carbon footprint and demonstrating measurable reductions. By and large, carbon footprint reports in the first year are going to have the very obvious suggestions. Change your light bulbs to LED. Consider a PPA agreement and solar panels. But what do you do after that, especially if you're reporting against the SBTi's, the Science Based Targets Initiative, or against your ISO 14064? Both of these standards require measurable reductions against your carbon reduction plan. And if you are bidding to procurement projects related to the NHS and you have to comply with NHS Evergreen as a procurement standard, then for level 3, you have to be demonstrating investments toward your carbon reduction plan. So with carbon reduction planning, one of the things that we do that I'm really proud of is all of our clients have an energy efficiency consultation so that you're not just being given the obvious suggestions on reducing emissions, but you're being given practical suggestions as to what you could be considering to reduce your energy and your costs and therefore your emissions. So carbon reduction plans and these wider standards, it's really important to be going beyond that tick boxing to actually looking at operational change. And frankly, why wouldn't you want to if it's going to save you money?
I think these are all absolutely excellent points, Natasha. And again, not to over-engineer the topic here. Those of you watching this video working with larger corporations, 250 people or more, you will also be very well subject to what's called ESOS, the Energy Savings Opportunity Scheme. Now, just to clarify something, that's about reducing your energy usage, the fuels you purchase or electricity you purchase, and that's about reducing how much you consume. It's very different from carbon reporting, which goes into all manner of aspects of where you produce carbon. Even if you purchase water, the water you consume has a carbon footprint, although it's not energy. Now, moving on from all of that, so there's if you like, a summary of what a carbon reporting is about and why, and the advantage, which is fundamentally to win more clients, to improve the environment, to look after society and the planet better. How do we go about actually delivering our services? So to start off with, everything we do, every single carbon reporting project we work on with a client is a 12-month project, because there's no guarantee, well, certainly that you might take more time to gather your data, but the issue is not the time it takes us to do your reporting, it's also the time it takes for you to implement any changes. And during the course of the year, you will want to be incorporating those changes into your report. So we do it. It's a subscription service for a year. Ultimately, it's about a consultant, a team of people working with you, a project manager and your carbon consultants, executive sponsor, to help you drive down your carbon emissions, to present the opportunities to reduce your carbon, and to translate these reductions into cost savings. That's what it's very much partly about. And as Natasha touched on earlier, for us to do the heavy lifting, we don't drown you in spreadsheets. It's very rare that we ever have a client need to even work with a spreadsheet to work with us, because we're providing a platform for the easy upload of data. And everything is one-on-one, guided consultations with your consultant. And typically, overwhelming majority of clients, the total time of engagement for a typical business of, say, whether it's 10 people or 50 people or 100 people, might be 5 to 8 hours. Obviously, if it's a hotel, very much more complicated data, there might be additional hours of consultation. But this is all included in every proposal, so it's very simple. And then finally, you might be integrating your carbon report into a wider ESG report, such as your B Corp certification, EcoVadis certification, a GRI framework report. And we help you with this too. Natasha, do you have any closing thoughts on carbon reporting, which
Yes.
might help our visitors?
And I think the most important point as an ESG firm is that we tend to see businesses start their entire ESG strategy on the need for carbon. But carbon reporting is not a commercial differentiator anymore. What is how you create that narrative of doing good across your business. So your carbon reduction plan is your first ESG action plan. Every single energy efficiency upgrade or investment, every emissions reduction strategy that you implement, which could even include your bike to work schemes, there's almost always a social benefit out of the backside of that. So bike to work, employee well-being, and improving your commuting emissions at the same time. Being able to change your light bulbs to LED reduces migraines from fluorescent lighting. Your carbon reduction plan, when you use ESG Pro, will come with a list of the disclosures that you can add into your NHS Evergreen around your CSR policies. It can go against your GRI disclosures or B Corp. It's an investment that goes far beyond energy and emission savings.
And on that note, please fill in the contact form at the bottom of our webpage. Pick up the phone, give us a call, speak to one of our expert consultants, or book a meeting with us online through our website. It's all there. Thank you very much for listening. We're ESG Pro.
Thank you.